Welcome back, everyone. This is Tony George. I'm super excited to have you here again in this YouTube channel. So, in this particular video, I want to show you how to use the Signal Center, one of the trading tools that we have and offer on our platform. So, yes, if you don't know how to download and install that video, please check still on this YouTube channel for how to download and install the Signal Center and other unique tools that we have into your MT4 or MT5 trading terminal. Okay, so just before I continue, if you're new to this YouTube channel, I'm super excited to have you. All you need to help me do is click the subscribe button and also turn on the notification bell so that you get notified every time we put up educational content just like this one. So yes, a lot of people have been calling and asking how can they use the Signal Center to place trades, and how can they use the Signal Center very effectively as much as they would want to use it. So in this video, I'm going to answer all of that question. But before we jump right straight to using the Signal Center very effectively, I would like to explain some features that are on the Signal Center. So yes, this first feature here, this icon here shows you the first two icons rather shows you how the traits and all everything can be displayed, right? So if you want it to be displayed in this chronological order, right, you will be able to click on this icon and then it goes that way. But would you want to see it in blocks, right, or in rectangles, so to say? You will be able to click this icon and of course it arranges it. For me, this is more appealing, so I'm going to go with this one. You can always choose your preference. So the next icon I would want to show you is this icon, right? The confidence level. So yes, let me talk a little about the confidence level. At the confidence level, it ranges from 0% to 100%. So this basically tells you that, okay, a trade could be 40% confidence, right? Or 80% confidence level. It simply means that the analysts have looked at the market and say, okay, I have more confidence on this trade, so it's 80%, or I have very strong confidence on this trade, so it could be 100%, right? And the other trades with lower confidence level perhaps would be trades that are not so they are not so confident about. Remember, the Signal Center is regulated by the Financial Conduct Authority in the UK, right? So that side. So let's quickly go over to some other features. So would you want to look for trades with 50% confidence level and above? Then you can move the confidence level to at least 40%, and automatically it's going to filter all the trades and show you only the trades with 40% and above confidence level. Should you want to look at trades from 60% and above, then you can still change as well, and it's going to show you only trades from 60% confidence level and above. I'm going to return it back to zero because I want to see all of the trades that are available for me. All right. So yes, here we have the classes. Okay, the classes of assets that can be traded, or rather we have signals for. So if you click on FX, you're going to see only currency pairs, right? Only currency pairs that are available for you to trade, and as well the ones that expired. So I'll come to that very shortly. If you click on commodities, it's going to show you only the trades on commodities, perhaps US oil, gold, and the rest of them. Yeah, the gold, of course, is not classified under FX, it's under commodities, right? And then we have the indices, we have the crypto, and we have the stocks. So whichever is your preference, whichever is the instrument that you love best to trade, you can find it on the Signal Center as well. Maybe not all the time. Currently, we have only currency pairs that are running. So that's FX, right? But then some other times, we have as well the commodities. We have analysis for indices, analysis for cryptos, and analysis for stocks. All right. That being said, the next is status, right? So we have in the status expired, sell limit, sell stop, buy limit, buy stop, and live trades. And I'm going to take my little time to explain all of these to you so you get to understand it very fully. So yes, basically all of the trades that are being given are given as pending orders, right? they are giving us pending orders. What do I mean by pending orders? They could be buy limits, they could be sell limits, they could be buy stop, and they could be sell stop. These are the major 4 types of pending orders that we have, right? So of course, you have the sell limits, you have the sell stop, you have the buy limits, and of course, we have the buy stop. So these are the major types of orders that we have. But as well, of course, trades that are currently running are classified as what? Live trades, just like we have this one here, right? Just like we have this one here. This is a live trade. Why? Because this trade, AUD JPY, is the conditions for the entry has been met and the trade is currently triggered and running, okay? I don't know if it's in loss or if it's in profit. So, but we'll check that out later, right? So let's quickly come over now back. So yes, as well, trades that have been expired, I mean, the conditions for those trades were not triggered until it was the time collapsed, the time expired. They are considered as expired trades. So those trades, if you place them, you don't make profit on them, or neither do you make losses on them. And of course, if it's expired, you still have it on your trade terminal, then you can as well close or deactivate or delete those trades off. So yes, under the status, these are all the types of trades that we might most likely see: expired, sell limit, sell stop, buy limit, buy stop, and as well the live trades. So currently we have about 4 trades that are still available for us to take: NZD JPY, AUD JPY, GBP JPY, and USD JPY. But already AUD JPY is on live trade, whereas the rest 3 are still pending orders. So the next thing I want to show you is how you can use this signal center to place your trade. So let's say I want to take my trade on NZD JPY. This is with 60% confidence level. All I have to do is click on the buy icon there, and automatically it takes me down here where I would be able to see more features on why it is NZD JPY and why it is a buy limit. So under the trade idea here, I'll be able to see when this trade was published, okay, and I'll also see when this trade is most likely to expire by tomorrow 6 p.m. UTC +3, right? And of course, I would be able to see the previous support levels, the previous resistance levels, and also why this trade should be a buy limit. Indecisive price action has resulted in sideways congestion on the intraday chart. Now, price action looks to be forming a bottom. So they're expecting that when prices moves down to the spots here, it picks off this trade. And of course, they're expecting that bullish run from here up onto this target, right? So this is why it's a buy limit. And of course, we have our stop loss here as well to protect us from huge losses should this trade not go in our favor, or based on how we have actually analyzed the market. So cut the long story short, how do you place the trade then? You see this icon here, all right? You see this icon here called trade now. That's the man. That's the man you would use to place your trade. So all you have to do is hit trade now. And of course, here you would have nothing to do here. The type of orders, spending and buy limit already set and analyzed for you. And then also here we have the price, the entry price, the stop loss, and as well the take profit level. So what you basically need to adjust is the volume, right? What you basically need to adjust is here, the volume. So we need to work on the volume. Now, the volume, or the lot size as it is called, is going to be decided by you based on the amount you want to risk on this particular trade. So I'm going to explain that just shortly. But for now, for sake of knowing how to place this trade, I'm going to quickly place the trade now. So I click on place and it tells me order was created successfully. As simple as that. And your order is already created. So let's see that order. So let's see that order, Control T, and of course you see NZD JPY, buy limit, the lot size is 0.01. This is the entry, This is the stop loss, this is the take profit, the current price where the market is, and of course, it's not running because it's a pending order, right? So yes, let's come back to this. Okay, let's come back to this. So that's exactly how we place those trades. So for AUD JPY, this is already a running trade, right? So I'm going to use this running trade to explain a whole lot to us. So let's open the chart of AUD JPY. I think I already have that here. Yes, this is a chart of AUD JPY. And of course, we are asked to buy AUD JPY. The entry is 93.0. Stop loss is 92.35. So let's go over back to the chart of AUD JPY. And of course, let's use this amazing line. So I'm going to find 93, which is the price we are asked to enter the market, right? So this is 93. So exactly at this point here, we were exactly at this spot here. Okay, just a second. This is a buy. So exactly at this point here, we can take a buy trade. Don't forget, let's find the stop loss. The stop loss is 92.35. So yes, we can duplicate this line and find 92.35. So that's 92.35. So this is our stop loss. And of course, duplicating this line so we can find the take profit. And what's the take profit? Let's quickly look at that value, 94.50. Okay, 94.50. I think let's still look for that take profit value, 94.50. So the take profit, it's somewhere around here. So it simply means we're already in massive profit. So let's quickly check how much profit that is, right? This is a whooping 770 pips profit. That earlier got into about 78 pips. This is around 70 pips or 71 pips profit already. So this is the target where the market is going to currently at the moment. So yes, I'm going to use this to illustrate to us. I'm going to use this to illustrate to us the lot size that we can use per time to enter every trade. Now that's going to be dependent on your risk management or your risk calculation. All right. Some people would say I risk only 1% of my account per trade. Okay. So it simply means if you're having $1,000, all right. So permit me to use the whiteboard. So if you're risking just 1%, if you're risking just 1% of $1,000, okay? If you're risking just 1% of $1,000, right? That's literally saying you're risking only $10, okay, per trade. Some persons will tell you I risk only 2%, right? Only 2% of my account balance on every single trade. So that's about $20 you're risking per trade. That's one way to do it. There are so many ways to do this. And that's why I need you to turn on the notification bell after subscribing to this channel, because I'm going to be dropping more videos as regards risk management and how you can manage your money, manage your risk, not just strategy alone, right? So let's say we're risking 2%. All right, there are still many more methods. There is a maximum drawdown method used to calculate the lot size or position sizing. Like, turn on the notification bell. Turn on the notification bell. Hit the subscribe button so you get notified every time I drop interesting videos on that. So let's say we're risking $20, right? Let's say we're risking $20 on this particular trade. So we have the risk, okay, measured to the reward. So if we're risking only $20, all right, our reward is not so important to us right now because already the system had calculated our take profit. So we would most likely want to go with the take profit calculated and given to us, or we would want to take our own risk, our own reward level. But I advise you stick to theirs or perhaps take your profit maybe a little close to the take profit level that was given to you. All right, that's by the way. But what we're most importantly interested about is the risk, okay? We're most importantly interested about this risk. How much are you willing to put down on this trade? That's the question. You need to find that out. Perhaps percentage risk per trade, or you want to use the maximum drawdown method. Okay, I'll share all of those videos shortly on this YouTube channel. So if we're risking $20 per trade, okay, on this trade, we're ready to put down $20 on this trade. The next thing is, would want to know how many pips is our stop loss away from our entry price. That's the most important thing. So it's a stop loss that it's most important to us. How many pips is this stop loss away from the entry price? That's the next question. So yes, we can use our cursor, have it to the entry price, right? Have it to the entry price, and from the entry price we can drag down to the stop loss, and this is about 652 points. Okay, that's about 65 pips. So 655 points, 652 points rather, is what we are willing to risk. All right, if you don't see that 652 points, you can look below. You can see 92.353, 20 bars. 20 bars shows you that, okay, from where we had the first cursor here to where currently we are is about 20 bars, right? So then we have the next, which is what? We have 655 points, right? So let's go with 655 points. So our stop loss, we are risking about 655 points on this trade. Now, how can we use that to know the lot size that we should place on this trade so that we don't risk more than $20 on this trade? It's very simple. Let's go back to the whiteboard and let me show you that real quick. So remember, we're risking only $20. So our lot size or the volume to be used to trade these particular instruments and not risk more than $20 can be calculated with this simple formula. If you're ready, of course, I am ready. Okay, so this is, of course, equal to your risk. Okay, this is equal to your risk per trade in dollars. This is your risk per trade in dollars. Okay. This is your risk per trade in dollars, all divided by your risk on that trade. I mean in points. Don't forget it's in points. Don't forget it's in points, right? All right, so basically we're going to have, let's quickly take that up. Basically, we are going to have $20, right? We're going to have $20, which we want to risk on this trade, all over our number of points, which is 655 points, right? That's going to give us what we're going to have as the lot size. So what would that be? Let's use a calculator. Let's use a calculator. This is 20 divided by 655. You don't need to do so much mathematics. So you see this? So this is about 0.03. That's the lot size we use. So we use 0.03 on this trade and the market goes against us. We already know we're not risking more than $20. Okay? We're not risking more than $20. Perhaps certain times you might want to factor in the spread into this. Okay, that's fine. If you factor in the spread, that should be around 20. That should be around 20 points. So we have 675. Okay, we have 20 divided by 675. 20 divided by 675, and let's see how much that gives us. This is still approximately 0.03. All right, so we know that we use 0.03 on this trade. We are not going to lose more than $20 that we have actually analyze that we are going to use. All right. So if I come back here, to my trade, right, I place this trade here at 93.00 with 0.03. And of course, I know that if it gets to my stop loss, that's only $20 I'm going to risk, because that's what I'm putting down on this trade. So with this proper risk management, I mean, you can place every trade and have the winnings. Of course, if this trade is, most of the trades are with risk to reward 1:3 or 1:2.5. So it simply means if you have at least 40% win or 45% win, I mean, it's still going to land you in some good profits. Risk management is the key. So this is exactly how to use the Signal Center to place your trade. If you get this, if you enjoy this, don't forget to subscribe to this channel and also turn on the notification bell so you get notified every time we drop educational and informative content as this one. See you.